The following is a presentation of TFNN.
Let's go to David from Clearwater.
Hey, Steve. Thank you for taking my call on this one, and to pass a compliment to you. Taken a lot of classes from Tom since I became a Tiger back in 2009, and they're always phenomenal classes. And last Friday was my first class with you. And just want to say, Steve, fantastic. You were well prepared. Material was excellent. It was timely. It was a really, really, really good class, and you kind of opened my eyes to a few things that have enabled me to use your terminology. Take massive action.
Hey, there you go. I love it.
Live at TFNN, The Trader's Edge, with your host, Steve Rhodes.
And he's picked out a landing spot that is a good 25 feet above the hull.
There's a good chance he doesn't get this inside the marker's ball.
Well, here it comes. Oh, my goodness. Seen anything like that? This guy's pretty good.
Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the January 2nd, terrific Thursday, 2014 edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. Hope everybody out there had a great, healthy, safe New Year's celebration. Let's make this an incredible, extraordinary, outrageous 2014. Let's go look at one of our tools. This is the tool I call what appears to us as the impossible may simply be the untried. You know, folks, nothing, and I mean nothing, is impossible. There are ways that lead to everything, and if we have sufficient will, we will always find the means. You know the expression, if there's a will, there's a way. Look, it's not just an expression, it's a way of life. In my opinion, to say that things are impossible is merely a search for an excuse. In fact, if you align yourself with a belief of limitations, then, well, impossible may seem an appropriate outcome. In fact, Merriam-Webster's dictionary search on the word turns up the following. It says not possible, unable to be done or performed, incapable of being true, or utterly impractical. In my opinion, the only definition of impossible is merely the untried, because if you have the will, you will find a way. So as we begin our new year together here at TFNN.com, and thanks so much for joining us, folks, no matter what your obstacles, no matter what it is that you may have to overcome in 2014, I'd like you to take the word impossible and instead say, I am possible. Because as you think, so shall you be. We must always remember that what the mind can conceive, it can achieve. Conceive it, believe it, and achieve it, folks. You are the ruler of the greatest nation on earth, your imagination. You know, 'tis a lesson you should heed. Try again, right? If at first you don't succeed, try, and I do mean try it again. Lost time. And this is key, because as we begin the new year, sometimes we take time for granted. Yet each day, we're given 86,400 seconds. You know, folks, you can't go back and grab even 2 seconds up there, so use every second you possibly can. And always remember this, to be wronged is nothing unless you continue to remember it. Don't carry those burdens with you. Instead, be a pioneer of your future versus a prisoner of your past. And of course, what appears to us as merely the impossible is simply the untried. Again, hope everybody out there had a great New Year's Eve. We're going to make this a great 2014. Right now, we got the Dow futures trading down 41 points, S&P futures off 4.5, NASDAQ futures off 10, Russell 2000 down about 7 points, and I guess we could say that we went out the year with a bang. And we can never forget that there is a theory of relativity. What goes up must come down. So did we actually see the high on New Year's Eve out there? Only time will tell. We got Goldilocks trading up $22 right now. It's trading at $12.24. Silver's up 72 cents. It's trading a little bit above $20. Crude oil down $1.32. That's trading at $97. Our call-in number is 877-927-6648. Give us a call, folks. Would be happy to take your call and answer whatever question we can. If we take a quick peek around the globe, we're going to find over in Europe here this morning, they're trading off as well. They're down about 62 points over in Germany. FTSE off about 14. That's trading down at 67.35. In Asia last night, a little bit of a celebration. The Nikkei was up about 0.7%, up 112 points. The Hang Seng up about 0.1%, really, up 33 points. The Shanghai down 0.3%. It went closed out at 2207. So where do we begin? How serious is this little retracement that we're having here this morning? Well, it's an excellent question, and only time is going to tell. And the chart that we're going to be paying attention to first, some people say, hey, why did the market open lower this morning, especially after that nice close that we saw on Tuesday? Well, it opened lower because of this currency pair, your favorite and mine, and that is the Euro-Japanese yen. Euro-Japanese yen pulling back this morning, and right now, if you're watching us on TigerTV, and I hope you are, if you're listening on the radio or your mobile device at TFNN.mobi, you have no idea how much we appreciate that. Remember, the show will stream live to your smartphone device, your pad. Just go to the homepage of TFNN.com, upper right-hand side. You'll see a button, 3 smartphones on it. Click on that. The show streams live to you. And, of course, you can catch the archive of this show on Channel 9. And what you're looking at on our screen here is the Euro-Japanese yen. It's the 120-minute chart out here. Now, when it comes to changing trends, obviously a monthly trend is going to change a lot slower than a weekly trend, which are going to change a lot slower than a daily. And then, of course, you got the 120-minute chart. So I'd say the 120-minute chart, pretty good, initial place to be paying attention to for a change in trend. Well, if we do take a look at this chart here, and it's a beauty, you've got the rising price channel. It's the black diagonal lines that you're looking at. I'll describe to you what I'm referring to, folks, if you're just listening in. If you go back to the time frame of 3 o'clock in the afternoon on November the 7th, the Euro-Japanese yen closed out at 131.44. That really becomes your first touch point in order to form your channel. And the channel, we're using co-located opens and closes out here. Opens and closes. What you're trying to do is you're trying to connect the dots. You're just trying to identify the largest number of opens and closes, doesn't matter which one it is, and along that little glide path out there. And so I've identified with the black diagonal lines, the upside right now, we're focused on the bottom portion of that. We can see that the Euro-Japanese yen has actually broken through that price channel. It's broken through it with what? With a wide-ranging bar, so it's broken through there with conviction. Now, I've also got a trend line that is established on my screen out here. That trend line is using the low that came in at about 3 o'clock in the morning on November the 8th out there, that low 131.29. And then the very next touch point that I'm using is the low that came in at about 5 p.m. on November 20th out at 134.09. You can see right now price is tracking right into that. We're going to go ahead and blow this up on my screen here. It's tracking right into that trend line. Now, as it's doing that, it's also moving down, and again, it's a 120-minute chart that we're looking at. It is also moving down into the oversold territory. So it's moving down, and I say that because we just simply use that relative strength / relative weakness indicator out there, and we're using the lower portion of it, and that's the 14 period that we're looking at here. So it has moved in towards that oversold territory. Now, it is going to be a light trading session, or should be a light trading. Actually, I don't know what it's going to be. What it should be is a light trading session. It's still holiday time out here. So, in one sense, a retracement and a pullback today and or a pullback tomorrow on light volume, albeit potential change in trends on some of the intermediate time frame charts out there, pullbacks on lighter volumes. They actually set up the B to the C of an A to B equals CD up. So we'll really have to be paying attention to the volume today out here. We did have a new moon come in on yesterday. We had the moon at perigee or apogee. I can't recall which one it was. We also had moon conjunct Pluto out there. We had a number of factors that oftentimes reflect changes in trend in the marketplace. So we're starting to see a little crack in the ice out here. Speaking of cracks in the ice, and if you watched the Classic yesterday, the Red Wings against the Maple Leafs, what a great game. Can you imagine 105,000 people at a hockey game? That's quite impressive out there. No, they had nothing but snow. So all of you in cold weather, so I understand there's going to be some snow up in the Northeast. Another reason for a light volume trading session today. So if you are up there, be safe, stay in. There's some football games. Actually, I don't think the football games come on till late today. What a great day for football yesterday. You know, UCF, University of Central Florida, beating Baylor. That was a good game. University of Michigan beating Stanford out there. Well, of course, it depends on which side of the game you were on out there. But for other than the Red Wings losing in a overtime shootout, which that was expected, once they got to the shootout, it was like, how can you have such great players that just simply can't get the puck in the net on a shootout? Well, that is called the Detroit Red Wings out there. In any event, we're going to be paying attention to the euro, Japanese yen. I can move to a little bit further in the oversold condition, but we ought to see a little bit of a bounce here. So we'll be paying attention to that for sure, because the question becomes, if we see a little bit of a bounce out of here, you know, is this going to form the B to a C of an A to B equals CD down? Now, of course, it always depends on the time frame that you're trading in. And so with regard to the monthly, with regard to the weekly, so with regard to your longer term assets, even what we're seeing here this morning is nothing to be concerned with, nothing to be worried about. In fact, if we switch over, take a look at this euro Japanese yen on the daily chart out here. The daily chart, boy, I don't like the fact that it says it, and it's all going to depend on the close today, but that 143.42, not a good scene out here. That says that what you could see, if we get a close there today, we're well away from the close out here. If we see a close below 143.42, I say probably 136.73 on the euro Japanese yen is what the target is. Now, that's nothing more than a normal move. But, of course, that normal move is going to put some selling pressure, or should put some selling pressure into the U.S. market. So we get back. I'm sure that many of you want to know what is going on with Goldilocks and what is going on with Hi-Ho Silver. Silver up right now 76 cents, nearly 4% this morning. And you've got gold up $22, trading out at $12.24. 877-927-6648. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
You see, it's cold outside.
I really can't stay.
Baby, it's cold outside.
I gotta go away.
But baby, it's cold outside.
This evening has
been hoping that you'd drop in.
So very nice.
I'll hold your hands. They're just like ice.
Stay warm, folks, because it is cold outside. If you are in the Northeast out there, I'd say come on down and visit us here in Florida. It's cold here, too, but cold for us is, in the 60s, 70s, and, 80s are not cold. Well, for me, anything below 70 is cold. But come on and join us. Come on and give us some nice big bear hugs, or any kind of hug that you want, here in downtown Clearwater. Now, let's go check in on Goldilocks. Let's go see what Goldilocks is doing. Right now, gold trading up about $21, trading out at $12.23. Now, it's the weekly chart. If you're watching this on TigerTV, it's the weekly chart that I've got on my screen. I believe I shared this with you folks just before the year came to an end on New Year's Eve. And the weekly chart is what we're looking at. Now, in the weekly chart here, I've got at the bottom of my screen, I've got the CFTC, the Commitment of Traders data, and it's important to understand, really, in 2 instances, what's the large money doing? Those are referred to as the commercial traders out here, and the data that I'm looking at is their net long, or their net short positions, I should say, as a percentage of open interest out here. Now, In the case of the commercials, that's at the very bottom quadrant of the screen out there. I don't know, can I call it a quadrant when there's only really three little groups here? I'm going to have to. Maybe is it a trident? I don't know. In any event, we're going to call it the bottom portion. How about that? I can't get in any trouble if I say the bottom window of my screen out there. That shows the commercials. They're sitting at the lowest net short position. Really, well, since the June lows out here, and well at levels below back in 2006 timeframe out here. Now, I didn't update it for the data that came out on Monday, other than just looked at the data to just make sure that it was in line with what we saw the prior week, and that's really what I'm taking a look at here. And what we know here with regard to Goldilocks is the large money. The large money. Now, these are big boats, and they can afford to not worry as much about timing as you and I, because their stops can be a little bit larger out there, I suppose. But in our case here, you don't want to do that. But the large money here is saying that they're expecting a fairly significant bottom. We're going to see if they're right. Now, the what we'll call... Well, it's just simply called the non-reportables. And what non-reportables are, it's a group of traders so small that the CFTC decided to name them non-reportables. Can you imagine being inside that meeting out there? Non-reportables really referring to folks like me, folks like you out there that, are just simply what we'll call smaller traders, certainly nothing near what the commercials are. And those smaller traders, those non-reportables, they're at their highest net short position. Well, we saw a little bit take place on Tuesday. It almost seems like we're back to work on a Monday. But what we saw take place on Tuesday, we saw some short covering take place. Now, understand, when we see a short covering rally take place here in Goldilocks, just the way that things are set up, it should be a pretty good short covering rally, because the sphincter muscles, and I can say that on the air, the sphincter muscles of those non-reportable groups, those individuals, once they start to see how, you think they were feeling good when they woke up this morning and saw, or maybe they woke up 2 or 3 in the morning, saw gold was up 16, 17, 18, $19 out there. Maybe not. Well, just wait till it's up 30 and 35 and 40 and 45 and $50. Then you're going to start to see some of this rally is going to be nothing more than just some pretty good short covering out there inside the market. Now, is it going to turn into something more than that? Well, only time will tell, and that time will tell as we get into swing points, volumes, and so forth. But what we can also see out here right at the 1206 level, that happens to be a primary trading range. That's your horizontal level of support when it comes to Goldilocks, and gold right now trading out at 1222. So it's got some pretty decent support. It's come down into a swing point. That's the June 28th area. It's done it with lighter volume. We know that the setup out here with regard to commercial traders as well as the non-reportable group, that's set up for a nice big bounce inside of Goldilocks. By the way, the same setup exists inside of high-ho silver as well, and silver has been acting stronger than gold. So that's what's going on the weekly chart as we take a look at gold and silver. What we also have with regard to gold, and it's a beauty out here, and that is that Stevie price relative strength divergent pattern that had set up here. And it's a beautiful pattern. It set itself up again here as we came in on New Year's Eve. What we really need to see today is that close above. I didn't mean to do that. A close above. Come on, baby. Even though it's cold outside, we need to see a close above 1226. That's that bar from December 19th, 2013. How about that? We're already into 2014. 1226, we're at 1223.90 out here. Should be a nice run to the top. 877-927-6648. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization execution capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
2014 has arrived, and Tom O'Brien has put together a special webinar for subscribers to his daily newsletter, Market Insights. That will be taking place the evening of Tuesday, January 7th from 6:30 till 7:30 p.m. All you have to do to attend this live event, which will be archived, is to be a subscriber to Tom's daily trading newsletter on the day of the webinar. Tom will be breaking down the three most important sectors that will shape the markets in 2014, the S&P, bonds, and real estate. Tom will provide his subscribers with a technical and fundamental take on these three sectors and how they can shape the entire market outlook for the upcoming year. For a limited time, we're extending a free trial to Tom's daily newsletter to a full 30 days. And even if you had the free trial previously, you're welcome to sign up and take advantage of the special offer, only good till January the 7th. Don't let another year pass you by. Sign up for your 30-day trial to Market Insights today and gain access to this exciting live webinar with Tom O'Brien. Visit the front page of TFNN.com today.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow off 55 points. It's trading down at 16,520. S&P's off 6, trading at 1842. Composite down 17 points. It is leading the charge to the downside. It's trading out at 41.59. Russell 2000 off about 4.5 points. It's trading at 11.59. Apple down about $6 right now. Microsoft down 13 cents. Google down $7 and change. Cisco off 6 pennies. Intel down 42 cents, leading the charge to the downside here. You've got Twitter off $1.78. Oramed Pharmaceuticals down $1.87 now. You've got Urban Outfitters. And I skip, when I do these, folks, I skip the ETFs out there, just to give you the individual stocks and what's happening. Urban Outfitters is, did I say down? Leading the charge to the upside. I think I was looking at one thing and saying something else. It's leading the charge to the upside. If I didn't say that, it's Twitter. It's up $2. It's Oramed Pharmaceuticals. We're going to start over. It's up $1.77. Urban Outfitters up $1.40. Fiat up $1.10. Splunk is not splunking. It's up $1.46. Now to the downside is Google. Google is off about $8. Apple down $6. LinkedIn off $5. Anheuser-Busch. This bud is not for you. This is trading down about $2. Intercloud Systems, ICLD, that is off about $2 as well. Our call number 877-927-6648. Give us a call, folks. Let's take a look at some of these stocks that are moving and grooving. Let's go take a look in at our core stocks. Let's go look at Apple, Google, IBM, and the like. See what we have going on out here. So Apple this morning down about, as I say, about $6 and change. It's trading out at $5.54. Still has this little island out here. So it's got this little island bottom pattern that has formed. An island bottom, folks, is you're looking at the trading session, the low of the trading session from December 17th. That low, 553.38. The high of the very next session out here, by the way, which was a hammer candle, that is on December 18th, and the high there is 551.45. So you got a little bit of distance between that high and the low of the preceding bar. Apple trades sideways for 2 trading sessions, and then boom, gaps up on the trading session of December 23rd. So the high of that hammer candle, let's see, that's 551.45. 551.61, actually, the high of December 20th. That becomes the area where it has formed that little island out there. And an island because we've got a gap to the downside and a gap to the upside out here. Now, even with price having pulled back on the trading session of December 30th, we saw a move higher on December 31st. Volume about the same on both days out there. Now, just because, let's put it to you like this. That's a bullish pattern. It's a very bullish pattern. I don't care where it forms on a chart out there. It's something to be paying attention to because, in fact, if that island fails, not just the island fail, not just closing the gap out there, that would be, no big deal. You're going back to rescue passengers, okay? Just like the folks that are over in Antarctica. They're getting rescued this morning. What would be a problem is if both the island pattern fails and the hammer candle from the trading session on December 18th, and that low is 538.80. So that's an important low when it comes to Apple out there. Number one, it could be forming, actually there's no A to B equals CD down pattern, but that would not be bullish. That would be very bearish to take out both of those patterns at the same time. We're not there yet, but that is one thing that we want to be paying attention to. Dow's off 70 points right now. S&P is down 8. Let's continue looking in on some of these core-related stocks out here. IBM having a nice showing out here, up at the trading level on Tuesday with 3.6 million shares, getting up to a high of 187.79. You're trading at 186.55 right now. Not that big of a deal. You can see price had moved towards that overbought condition. What IBM has done, which is very bullish out there, what IBM has done is it's gotten back inside of that consolidation range, that 30-point consolidation range. It says thus far as we speak right now, the break to the downside was a false break, and that was inside of IBM. Looks like it's setting up this little W pattern out here, but it's got some more time in order for that pattern to complete. So IBM not looking too bad here as we speak at the moment, but we're only 8 minutes into the trading session, so far too early. Let's take a look at Intel. Let's go see what Intel is doing. I see a black horizontal line going across my screen. That must mean something. Well, there's a open window out there, and that was a window that acted as resistance. Should act as support. We'll see if it does throughout the trading session here. That open window or that support level being the low of 25.66 from the trading session on August 22nd out there. We'll see if that. We'll see if now that's a. What Intel was also trying to do here. Let's take a look at what I was doing on Tuesday, trying to take on the swing point, and is trading with inside that swing point from June the 4th. 68 million shares out there came into it with volume of 16 million shares. 12 million shares. I'm looking at the December 27th, 28th, 19 million shares on the 30th, 31st, 22 million shares. So not enough to overtake that swing point. That swing point high, 25.98. If, in fact, Intel can take it out, 25.98 do with more than 68 million shares, you'd have a confirmed A to B equals CD up on a larger term time frame basis, but not so fast, not here just at the moment. Let's take a look at some of these other core stocks. Let's take a look at Google, see what Google is doing out here. You've got Google on on Tuesday. Boy, it's going to take a little while to get used to this. December 31st gets up to a high of 1121. Even Steven out there does it with 1.4 million shares. Looks like one of Basil's round number highs out there. 11.21 even, Steven. Today you're trading at 11.13. So far in the first 10 minutes of trading, back with a volume of 198,000 shares. Made that high with 1.3 million shares on December 31st. So it's got some pretty decent volume on the down move here this morning, but still nothing that looks very bearish at this as we speak. A little bit of a gap, a little untested window out here from the trading session on December 23rd. So the first area to really be tested as a support level, we'll call it Area 1 and Area 2. And that's going to be your low of December 23rd. That's 11:05:12, as well as the high of December 20th, which is at 11:01:17. A little bit of a window out there. Volume-wise, you're dealing with about you use 3 million shares, 3.2 million shares from December the 20th out there. So we'll be paying attention to that most certainly. So now we got the Dow off 105. Let's go peek in here. I'll do it in a moment. We'll go take a look at that Euro Japanese yen, see what it's doing. Then we'll also take a look at the currency pairs. Let's see what else do we have in here. JP Morgan, let's go take a look at JP Morgan and Priceline. I want to take a look at Priceline as well. If we take a look at JP Morgan, it made a high with some light volume. Oh, wait a minute. It's a weekly chart that I'm looking at. So give me a second here to switch over to what the heck did I do there? Let's go take a look at a daily chart for J.P. Morgan, see what it did here on Friday. There we go, Friday. On Tuesday, it was up with 11 million shares out here. It's testing the B point of an A to B equals CD. That B point had 18 million shares. It got up and over it with 13 million shares. Light volume all the way up and over. It's not a confirmed A to B equals CD up. Right now, that B point, that November 25th high, 58.14. You're trading at 58.07 right now, and volume inside J.P. Morgan about 1.7 million shares. Let's take a look here at mentioned Priceline. Priceline is starting to show some real cracks in its ice out here. Of course, right now, what it's really doing, traveling in this little sideways consolidation. Let me get rid of some of these lines on the chart out here. In fact, so it made you can see here, if we look at the most recent, the smaller A to B equals CD, the 1 to 1.272, it completed that pattern almost to the T. 1197.33 was the number. It got up to a high of 1198.75. You got to like that. I'm going to go ahead and get rid of that pattern as we speak. And then we're going to take a look at the little consolidation that it is in. So we'll see in the consolidation here, the importance of that is if it breaks the consolidation. And the consolidation, I would say right now, runs to about, this is the range out here that I would be looking at. I look at the low from the trading session of December 18th. That was the 1145 number. So 1145 up to the highs out here of, 1196. So what does that make it? About a 50-point type consolidation. If, in fact, we see Priceline close below 1145, then it's going to break the 1100 number. It should get down to about 1095. And 1095, where does that take us to? Well, if we just take a look at retracements, just simply off of the last leg out here, meaning November 7th's high November 7th's low down up to the high that came in on November the 29th out here. 1088 is your 0.618 retracement level. So that's where I would say it would be headed to volume-wise. It's got a little volume bar on November the 8th. That's the last time we saw any real significant volume come into this equity, the high of which is 1077. So you'd expect 1077 to be its first target to provide you with some information if, in fact, it can break the consolidation pattern, which it has not done as of yet. But it is showing some chinks in its armor out there. Now I'm going to switch over into the 120-minute chart. We'll go back and take a look at the euro yen. Then we'll go take a look at the currency pairs, see what they're doing. So here we got the euro Japanese yen 120-minute chart. This time frame doesn't complete for another hour and 15 minutes out there until 11 o'clock. So we do see the trend line. It is under attack at the 142.89 area. That is a primary trading range. We see here it's just coming back and testing the gap as well. That occurred at 1 o'clock in the morning on December the 26th out there. So the euro Japanese yen inside the oversold area. We should begin to see some. Now this is on the 120-minute chart. Let's go take a look at a 30-minute chart out here. Let's go see how oversold this is, if at all. Well, it's not looking good here. It's not looking like maybe something more of a deeper retracement. You can see quite a, so here's the same real trend lines. Now here's the 30-minute chart for the euro Japanese yen. So you can see on the 30-minute chart that I've drawn here, really right into the bottom of that level. That's the dark line on my screen. I'm going to get rid of all the retracement levels because that's just confusing maybe anybody who's following along, so we'll get rid of that. So there is a clean chart for the euro Japanese yen. We'll see if this area here can hold. If it can hold, then we'll start to see some kind of a bounce in the marketplace, and that's really going to be key to setting up the type of trend change that we may be experiencing here in the marketplace. And in any event, let's go take a look at, I mentioned the other currency pairs, so let's go look at that. Of course, let's go start off with the king. You got the U.S. dollar index. That is up this morning, so you got the U.S. dollar index up this morning. You got gold up nicely this morning. Right now, the U.S. dollar index, after forming that little Gartley buy pattern, it's back up into the 0.618 retracement of its A to D swing point. You might ask me, what is that? That A to D, the A to B equals CD. I'm just looking at the A to D points. Your A point on your A to B equals CD down. That set up the 0.786 Gartley. That took place on November 8th. 81.58 is the A point. Your B point out here was the low on November 20th. That was at $80.50. Makes a normal retracement. At normal retracement, 0.786, getting up into the high on November 21st, 81.33. Completes the 1-to-1 A to B equals CD. Does it on the Uncle Ben Bernanke day out there, his going away party. As we saw the U.S. dollar index there, it moved down into the low of 79.50, completing that Gartley buy pattern. Then it was off to the moon out here. Does look like what the U.S. dollar index could now be doing is really setting up an A to B equals CD up. If we take a look at that would say that the U.S. dollar index would want to get up to the area of about 81.33. That would be a test of the most recent swing point high, and that's the swing point from November 8th out there, anywhere between 80.79 to 81.58. Looks like that's where the U.S. dollar index wants to head to. Of course, that means that the Queen would be backing off a bit here, so let's go check in on the Queen. That is the Euro. That is the Euro U.S. dollar. Let's go look at the. There we go. Let's look at the euro U.S. dollar, and then we can come back and take a look at the Japanese yen. Here's the weekly chart. Weekly chart we saw last week, the move up to test that trend line. That's the black diagonal line you see on my screen out there. And that's an important trend, because if that trend gets broken, that's a trend that's been established going all the way back into the 2008 time frame. Thus far, that is held. Where is the euro likely to head back to? I say it's going to head back to the bottom of the rising price channel, the bottom of the rising sun, and that's the blue diagonal line you see on the bottom of my screen. That's starting with the open of the session of the week of July 27th out there. The euro there opened up at 121.50. That is the touch point that I am using out here. And then I'm using the open of the trading session from July 5th, and that open was at 130 even Steven, 1.3009 though to be exact, and that runs into your two touch points out here, primarily the open from September 13th out there, and that is the bottom of the rising price channel. That is where I suspect we will see the euro slip back to before it provides us with any additional information out here. The U.S. dollar Japanese yen, that's trading down a bit. This is a 30-minute chart on my screen. We want to take a look at a longer-term time frame out here. Let's change this to the daily. The daily now having a key reversal session as we speak today. Well, let me make sure that this thing, it should be a little bit extended here. as we take a look at it, yeah, most certainly it is into the overbought territory. So inside the U.S. dollar, Japanese yen, just as a little timeout here, we did see the doji. There was a doji in Stevie's window out here. That doji took place on December 30th. And now today what we're seeing is a key reversal session. We get back from this break, I'll tell you what a key reversal session is. 877-927-6648. Be right back, folks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow off 77. S&P is down about 10. That euro Japanese yen currency pair, moving into that extreme sold condition, running right into the bottom of that rising price channel here on the 30-minute chart. You can see that area right now is being rejected. We'll see if, in fact, that holds. Now, back to the U.S. dollar Japanese yen currency pair. I mentioned before we went into break that it is forming thus far today a key reversal session out here. Now, a key reversal session, in order for it to occur, you need to have three things. You need to be on number one, be in an extended market. I believe that we are on two accounts. Number one, if you take a look at that relative strength, that 14-period relative strength out there, you're up towards the overbought condition. That's in that 70-ish level. Well, we're most certainly there as we speak right now. So there's one version of what I'll call extended. You also have the completion of your 1 to 1.272A to B equals CD up pattern. I'm glad you asked me what that is. Well, in this case here, all markets work in those lightning bolt patterns. If we take a look at our 8-point, that's going to be the low that came in on June 13th. That's the 93.77 mark. That's your 8-point. Your B point out here is July the 8th. That's the high of 101.52. The lightning bolt pulls all the way back down in order to form into the C point, and that was on August the 8th out there. That was at a low of 95.79. Your 1-to-1 A to B equals CD. Those only complete 40% of the time. That was at 103.55 out here. You can see as that level was being approached, it was doing it with this little wide-ranging bar out here on the trading session of December 12th. And really when it was hit on December 13th. Now that December 13th session when it was hit, someone might have said, hey, I can just go ahead and sell that D point right then and there. I would say, something to think about. Why? Because you came into it nice little couple of wide-ranging bars. You had one right here on December 6th as well as you had one right here on December the 12th. And all that really took place inside the U.S. dollar Japanese yen was it backed off with three relatively small bodies out here, never got outside of the open of the session on December 12th. Instead, you had a continuation pattern, the rising three out here. And that was with that wide-ranging bar on December 18th. That said it wanted to the next level. Well, the next level is your 1 to 1.272 A to B equals CD. 105.64 is the number. You got up to 105.40, and that was with that little doji candle on December 30th. As you're coming into a resistance area with a doji, it has a bunch of meaning. Really an inside trading session on the very next day on December 31st. Now today we have seen a move above and below the prior session. So on January 2nd, we're seeing a move above and below the prior session. Plus, you had that doji from the prior, not from the prior, but 2 sessions ago. So that's telling you the market is a little bit tired out here. And so that's a second thing that you need in a key reversal session. You need to see a high and low, both above and below the prior session. And then the third thing, which we don't have necessarily just yet, we do if we close the session, you just need to see, in this case here, a close in the opposite direction. That means on my charts, you would see a red candle out there. What does that set up? Well, that sets up a retracement. Now, where would that retracement take us to? Well, first we would take a look at the trend line, the horizontal line that was created on May 22nd out there. It was made the following session was a little bearish reversal signal out here. So we're going to use that as going to be our support level, and that's at 103.72. That's the first place where I would be taking a look at the U.S. dollar, Japanese yen pulling back to. We'll see if it can find some support there, assuming that it does have some follow-through today, and you do see that key reversal session unfold. So right now, the Dow is off 76. S&P is down 9 on the intraday chart. The Euro-Japanese yen seems to be holding its own. Folks, thanks so much for joining us on this terrific Thursday on the first trading session of 2014. Let's make this a great year together. Thanks so much for joining us here at TFNN. Stay tuned. The Money Masters show is up next if you're off to start your day. Stay warm, be safe, and I'll look forward to seeing you tomorrow morning, 9 a.m. sharp. Have a great day, folks. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. the king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.